It's another day that we are continuing with the business data analytics, and this day we are reviewing the question for December 2024. Question number 24. This was a question on taxation, the specialization area of taxation. This is the question that we are reviewing today, and if you are yet to subscribe to this channel, kindly consider subscribing. If you are yet to start your BDA for May 2025 to August, we are preparing for August examination. Our intake is still ongoing. Our intake is still ongoing. I will leave the description, our contacts, and how you can join so that you can learn with the best in the industry. So let us look at this particular question. Question number 24. It was a specialization area of taxation, and the question reads, you are a tax consultant for Safi Solution Limited, a Kenyan company that specializes in renewable energy technologies. The financial year ended that 1st December 2024, and the company is preparing its financial statement for tax compliance and planning purposes. Below is the financial data provided by the company. So I've been given the description and the amount. Additional depreciation is on straight line method is applied to machinery and equipment valued at 10 million. The useful life is 4 years. The company qualifies for a 100% deduction on research and development costs incurred in renewable energy projects. The interest paid on director's loan is non-deductible for tax purposes. The declared dividend is subject to the holding tax of 5%. Only 50% of the provision is allowable as a deduction for tax purposes. Other income include gains from sale of assets which are taxable. Additional tax relief on research and development investment is 10% of research and development costs. So you are required to prepare statement of profit or loss to determine the taxable income for Safi Solution Limited for the year ended 31st December 2024. Determine the total current tax expense for the year ended 31st December 2024. Compute the net tax payable after accounting for tax credit and liabilities, and assess the impact of dividend on the overall tax liability for Safi Solution Limited. So that is our question, and we shall start handling the first part of our question, where we need to prepare the statement of profit or loss. So this is Wasafi Solution Limited. Wasafi Solution Limited. Solutions Limited. Statement of profit or loss. So statement of profit or loss to determine. So statement of taxable. Statement of taxable profit or loss. Statement of taxable profit or loss, and it is for the year ended. That 1st of December. 2024. So the statement of taxable profit or loss. So I'll just put bottom border there. So already we have some information that we know. Already we have been given the revenue, and they are shillings in thousand. So we shall use these. They are in thousand of shillings. So in thousand. So in thousand here. And these are the one in thousand. So start with revenue. What already we know. We have been given our revenue. We'll just edit this part. So our revenue, in this case, we had 80, and already we know the cost. We know the cost of goods sold. Our cost of goods sold was 40. So this one will give us a gross profit when we deduct these two. We shall get the gross profit. And our gross profit will be 40,000. Our gross profit will be 40,000, that way. Then after getting the gross profit, we have what we call other income that we are told it is taxable, other income, that is taxable income. Here we have other income, and this other income that was taxable, other income of 5,000, other income of 5,000, so which will give us a total taxable income, total taxable income, total taxable income, total taxable income. Here we shall add the two. Okay, so just need to add these two, which will give you 45,000. Let me adjust the font so that I have a similar font size that I'm using, 45,000, that way. Then after that we shall less allowable deduction, so we less allowable expenses, less allowable expenses, and our allowable expenses, the first one, we shall start with what we call operating. I think I saw that operating expense here. Our operating expense, the operating expense was 15,000. We have the interest expense, and our interest expense, we were given 3,000 interest expense. Then research and development costs, research and development costs. So we are told about that, where is it? Other income, additional tax relief. The company qualifies for 100% deduction on research and development costs incurred. So this is an allowable deduction on capital research and development. Yeah, research and development. So we are told that one is allowable. So allowable deduction of 8. Then for the bad debts, we are told something. The bad debts, only 50% of provision is allowable as a deduction for tax purposes. Provision is allowable. So remember, allowance for bad debts. So I've been given this allowance for bad debts. It's only 50% of the provision is allowable. Only 50%. So if it is 50%, it means that 50% will be specific. The other will be general. So just multiply 50%, which the qualifying amount of the allowable will be 300. The allowable will be 300. Then we shall less the investment allowance on research and development, R&D, research and development, on research and development. So research and development, we are told we are allowing 10%. Yeah, additional tax relief on research and development, investment of 10% is allowed. Yeah, so that is an allowance. Again, additional tax relief on research and development investment is 10%. So 10% will be allowed on that. So we shall have an additional of 10%. So additional tax relief on research and development investment is 10%. Yeah, that one will be allowed. 10% of this, 10%, an additional relief. Then apart from that, we have investment allowance on machinery. So we had machinery in depreciation on straight line method is applied to machinery and equipment. So remember, machinery, we shall calculate the investment allowance on machinery at the rate of 50%. At the rate of 50%. Loans from directors, so interest paid. So remember, this one we don't consider, it's not allowable. So research and utilized credit, we shall deal with that, and utilize tax credit from research and development. So this one is yet to be utilized. Then taxable income before deduction, you have to determine that. Current tax rate is 30. I think that is all, but I need to see this. The tax relief on research and development investment is 10% of research. So this one should be able to reduce our tax liability. Let me eliminate it here. When they talk about the tax relief, we shall take it from the tax payable. Yeah, the tax payable. That is where we shall deal with that. So here we shall less the investment allowance. Investment allowance on machine. Allowance on machinery and equipment. Machinery and equipment. Machinery and equipment here. Machinery is 10,000. We multiply by 50%. The rate for it qualifies for investment deduction 50%, 50 investment allowance. So they're telling us about what? Let me just say that only 50% of the provision is allowed. We have dealt with that. So depreciation on straight line method is applied to machinery and equipment. Yeah, this is machinery and equipment. This life. So this machinery, then it will be under what? 25%. It will not be 50. It's not an ID. So it will be under 25. 25% machines. Yeah, machines. 25%. 25% of that. 25%. So it's not manufacturing, just machinery and equipment. It can either be office equipment, and that's why we are taking the 25%. The 25%. Interest paid on director's loan is non-deductible, so that one we have not deducted. And I think that is all that we had there. We just need to get the total of these expenses, and we shall get our taxable profit. This is our taxable profit. Taxable profit, and our taxable profit here will be this, and we deduct this. So this will be our taxable profit. Our taxable profit. So our taxable profit will be 16,200. 16,200. The second part of it, we determine. I'll put it here. Yeah, let me just put under this. We determine. So I'll put here. So determine the total current tax expense for the year. So our tax expense. Our tax expense shillings in thousand. Tax expense. Tax expense. Our tax expense will be here. The taxable profit, we multiply by 30%. We are told the rate is 30. We multiply by 30%. So this is tax payable. Yeah, so determine the total current tax expense. So tax payable, we just call it that way. Our tax payable will be 48. Our tax payable will be 48.60. 48.60 will be our tax payable in that case. Then number C is where we need to compute under part C. Compute the net tax payable after accounting for tax credit and liabilities. Where we have the tax credit and liabilities, here we shall account for that. So we shall have our tax payable. Let me use here shillings in thousand. So our tax payable, we have 48. We have this value 48. So we have the tax credit. The tax credit that we shall get. The tax credit we have been given here. Unutilized tax credit of 1, 2. And I'll deduct this. It will reduce our tax payable. Then we shall have an additional. So there was this additional tax relief. So tax relief. Shall have tax relief. And our tax relief will be additional. Out of the 8,000, we are getting 10%. So tax relief on research and development, R&D, research and development. So this one will reduce our tax liability. And there is something we call the shortfall tax. Shortfall tax. Remember, company is supposed to distribute 60% and retain 40%. They're supposed to retain 40% of their taxable income and distribute 60%. But in our case, we know dividend declared. was this. This was the dividend that was declared. Dividend that was declared, and therefore in this case we shall have what we call, if I can compute that here, the dividend declared, so they declared a dividend of 4,000. Then the one that was supposed to be declared, it was supposed to be, so they declare out of this, they're supposed to distribute 60%. They're supposed to distribute 60% of their taxable profit, and it is 60% of not even the taxable, 60% of the profit after tax. So it should be 60% of the profit after tax. So it should be this one. I'll put minus this one, the tax payable. Whatever remains, they are supposed to distribute 60% of that. What remains, 60%. So they are supposed to distribute these, 6804. So let me just deal with these. I'll do it here. Dividend as per provision. So dividend as per law into bracket 60%. You're supposed to distribute 60%. So the law requires them to distribute 60% of their operating profit, that is the net profit, 60%. So this will be, we are taking this 16 minus the tax and you multiply by 60%. So they were to distribute that as per the law required. They were to distribute that amount. They were supposed to distribute that amount that way. So they were to distribute 68, but they distributed these. So we are having a shortfall. We're having a shortfall of the difference between the two. So this is the shortfall that we are having, So from this now is what we shall pay the shortfall tax. We shall be able to pay the shortfall tax. Shortfall tax is normally the withholding tax. Shortfall tax on this dividend, 5%. So what we have been told, the withholding, the declared dividend is subject to withholding tax of 5%. The declared dividend. So whatever was declared was less. So we shall multiply that. So the government will be denied revenue or tax in terms of 5% of the underdistributed, which becomes 140. So shortfall tax here of 140. So that the net tax payable here, net tax payable here, so we shall get that our net tax payable will be 3 million will be our net tax. 3 million will be our net tax payable, The last part of this question, we are told to assess the impact of dividend on the overall tax liability for SAFI solution. So in this case, our assessment will be, remember the declared dividend was below what is required as per the law established, and therefore we shall be able to calculate, or we shall be able to explain, and we shall say that the dividend, we are just to assess the impact. The dividend declared is below. The set standard. It's below the set standard, as companies as companies are supposed to retain 60%, of operating 60%. Just a minute, whether we are retaining. Okay, so allow me to change. Allow me to correct this. So we are supposed to retain, I will come back to this. So we are supposed to retain 60% of operating income, 60% of operating income, 60% of operating income, operating profit, retain 60% and distribute 40. So we have done the opposite. Distribute 40%. Distribute 40% to shareholders. Shareholders. So in the event, let us first correct this. Dividend as per law, they are supposed to distribute 40. So this one was supposed to be 40%. So 40% was supposed to be 45.36. So they just have a shortfall of 5.36, and the shortfall tax will be 26. Shortfall tax will be 26 that way. That one now has been corrected. It's 40. They're supposed to distribute 40 and retain 60. If it is other income, we distribute the entire 100% of the other income, which is not operating income, to shareholders that way. So in the event, normally say that in the event of less dividend distribution, the company is charged a shortfall tax. At 5%. At 5%. 5% on the shortfall. Remember, 5% is on the shortfall, and therefore increases the tax liability. Increases the tax liability of the company. Increases the tax liability of the company. So the impact of shortfall is that it will increase the tax liability of the company. The tax liability will be able to increase. That is the main impact of them not paying the correct dividend according to the law established. If they underpay, then they are supposed to pay the shortfall tax, and that's how that question 24 on December 2024 was supposed to be done. Kindly, if you are new to this channel, consider subscribing. And we are offering BDA online classes, where we have 3 classes per week: Monday, Wednesday, and Thursday. From 8:20 to 9:45 p.m. We just started last week, so you are not late. Kindly consider joining us, and we believe from here it is possible. Elohim is a place where we believe from here it's possible. So thank you.